Hello, Accounting 251. I got a request today in class to go over problem number 15 from homework assignment 10. So that's what we're going to do in this video. The class suggested that I do it over video so you guys could pause it and rewatch it. So I thought that was a good idea, so we're going to try that right now. So basically, this problem is asking us to create a cash budget. So if we look at what the inputs are that we need to give Cengage, it wants us to know estimated cash receipts from cash sales, collection of accounts receivable, total cash receipts would be those added, and then estimated cash payments for manufacturing costs, SG&A expenses, and capital expenditures, and then other purposes, income tax, dividends, which would give us total cash payments. Then we need to give it cash increase or decrease, cash balance at the beginning of the month, cash balance at the end of the month, minimum cash balance, and then if there's any excess or deficiency versus that minimum cash balance. So that's what we're going to do. So if we look at the details of the problem, it gives us this information: our sales, our manufacturing costs, SG&A expenses, and capital expenditures. And then it gives us additional details to determine how much of this is in cash, how much of it is non-cash, and when we're going to be collecting these payments from our customers, and when we're going to be making these payments for our expenses to our vendors. So I suggest that you pull this problem up on some sort of media. Print it, put it on a tablet, another screen if you have one, something so you can see it, because we're going to work in Excel to get these answers, and we're only going to bring the Cengage window back over here to what you guys can see when we're creating inputs. So based on that information, I created this Excel sheet here. So let me move my Cengage over where I can see it and read this problem. So this is the same sales, manufacturing, SG&A expense information that it already gave us. So let's break this down piece by piece. The next thing it says is the company expects to sell 10% of its merchandise for cash. So we know what we're trying to create is cash receipts, right? So cash sales, and we know that's going to be 10% of our total sales. So we're going to multiply our total sales by 0.10 for each month, and that will give us our cash sales for each month. The next thing it says is of the sales on account, 70% are expected to be collected in the month following the sale, and the remainder will be collected in the following month, or the second month following the sale. So let's first figure out, I went ahead and inserted a line here, what our accounts receivable sales, or our sales on account, let's do that, sales on account will be. So basically it's going to be, it told us we're going to have 10% of our sales will be cash, so that the other 90%, or 0.90, will be on account. So let's do that. So those will be our sales on account. So then we will need to know how much of that we're collecting each month. So collected, or let's say AR collections is what we'll call it. And let's separate the sales on account versus actual cash receipts, because these are going to be inputs into our Cengage here. So, excuse me. So what we need to know is how much we're collecting each month. Well, it told us that 70% of our AR sales will be collected in the month following the sale, and the remainder will be collected in the month after that. Well, that doesn't really help us for May, so we need to seek out additional information for May as far as what our accounts receivable was. If we go down into the second paragraph of the problem, it says accounts receivable of 90,000 was as of May 1st, so we had accounts receivable of 90,000. 72,000 of that would be in April sales, and 18,000 would be from March sales. Now if we go back again, we collect 70,000 of our AR sales in the next month following the sale, and then the remainder the month after that. So all 18,000 of those March sales we will collect in May. So I'm going to do equals parentheses 18,000, and then I want to know how much of the 72,000 from April we're going to collect. Well, it tells us 70%, so I'm going to do plus the 72,000 times 0.7. So our cash collections, our AR collections in May should be 68,400. So then in June, we're going to have the other 30% of that 78,000 from April, right? Times 0.3 plus what were our AR sales or our sales on account for May? Well, we look up here to here. We had 77,400, so we'll have 77,400 times 0.7. Or we could reference that cell is probably a better idea, times 0.7. So that should be our AR collections for for June, and then we'll do the same thing for July. So for July, we will have the remaining, so the 30% of the 77,400. So we'll multiply that by 0.3, and then we'll add 70% of June's AR sales, or our sales on account. So we'll do C8 times 0.7. So that should be our AR collections on account, or our AR collections. So I think if we look at Cengage, those should be our first two lines of the input. So I'm going to do this. I'm going to snap that over there, and let's see if I can get this good size here. That'll work. Maybe we can show everything. Perfect. Okay, so our cash sales should be 8,600 for May, as we see in cell B10 here. For June should be 9,000, and for July should be 9,500. Then our collections of accounts receivable should be 68,400, 77,580, and then 79,920. So our total cash receipts, we'll run sums here. So those are just adding these two cells together. Our total cash receipts should be 77,000 for May, 86,580 for June, and 89,420 for July. Let's go ahead and check our work to make sure we're on track. Okay, so we messed something up about these collections of accounts receivable in June. So let's look. Okay, so I know what I think I know what we messed up. Let's go back up to here and double check. It said, okay, so I do know what we messed up. I typed in for the remaining of the April collection, 78,000, but we sold 72,000 worth of AR in April. So we wanted 72 there, so that's going to change that number to 75,780, and this number here to 84,780. So let's check our work and make sure we're back on track here. Perfect. Okay, so now we need to figure out what our cash payments were for manufacturing costs and SG&A expenses. So let's go back up to our detail here. After the AR stuff, it says depreciation, insurance, and property tax expense represent $3,500 of estimated monthly manufacturing costs. So that's our manufacturing costs here, or here. And it's telling us that 3,500 of that is non-cash items, and here's why. Remember, we already know depreciation is a non-cash expense, right, from our cash flow. Well, it's insurance and property tax expense are typically cash expense, but it goes on to say the annual insurance premium is paid in September. Well, so insurance is prepaid, it's paid in advance, and we pay that in September. So we're just going to amortize some of that prepaid insurance for the expense here. We won't have any cash outlay because neither of these months are September. And the annual property tax are paid in November. Same deal. They're not in these months. So we have $3,500 worth of non-cash items. So for manufacturing costs, we see that we need to back out $3,500. So we will do cash manufacturing, or let's say non-cash elimination. So we will have manufacturing costs minus 3,500. And we can copy that formula over and it'll go to the manufacturing costs for each month. Okay, so now this should be cash items. Sort of. We have to find out how much we actually pay in cash and how much we pay on accounts payable and when. So it goes on to say, of the remainder of the manufacturing costs, 80% are expected to be paid in the month which they are incurred, and the balance will be paid in the following month. So let's say cash payments should be B15 times 0.8. Now let's see if we have any what our manufacturing cost payment should be from the prior month. So it says current assets of May 1st, cash include this, marketable securities of this, and accounts receivable of this. Sales on account for March and April were 60 and 72,000 respectively. So we already used that information. Current liabilities as of May 1st include 6,000 of accounts payable incurred in April for manufacturing costs. So we pay the remainder of our manufacturing costs in the following month, so we need to add plus that 6,000 into our May payments, right? Now for cash payments for the rest, we need to multiply May times 0.2 because we pay 80% in the current month and the remainder in the following month. So I'm going to use parentheses even though I don't really need to. I like to make sure I know my order of operations is correct. So then in for June we need to multiply this by 0.8. And we can actually copy that formula over and it will move our stuff over here. So that should be our cash payments for manufacturing costs. So let's check that real quick. We'll input that here into Cengage. And we got it right. So now we need to figure out SG&A expenses. I'm using a tool here that only allows me to do 15 minutes of video at a time, so I'm going to have to break this up into another section here in a minute. I've got 2 minutes left here. So for SG&A expenses, they're paid in cash in the period they're incurred. So that's easy. We should be able to do cash payments for, we'll say SG&A. And it should match what's here. So I'll go ahead and do that. So we'll have 15,000, 16,000, and 22,000. And our capital expenditures, what does it say about that? Quarterly dividend. Does it give us any information about the capital expenditures? It doesn't look like it, so I think we can assume that we're paying that in cash. Let's try it. Awesome. So we're at this point, I'm at 14 minutes and 15 seconds or so right now. I'm gonna stop this video and we will pick it back up after with hopefully the remainder of this problem in another 15-minute video.